This week, I had a conversation with one of my friends who's looking to buy a home. I shared some insights with them when it comes to what you require in order for you to buy a home. And I thought I should do a video. You never know who this can help. Today we're talking about how much money you need to buy a house. I think one of the things about buying a home is for you to be able to manage your expectations. And when I talk about manage your expectations, I'm talking about the cost. What are the costs involved? So I will try to break down to you today. Before we do that, thank you so much. If you have already subscribed to our channel, C2C Mentors is a real estate mentorship community, and we talk here about your finances because we understand it is the foundation for every family. And if you have not subscribed to our channel, please do so. Also hit the like button because it helps us with our ratings, and also hit the notification bell. That way you get our videos as soon as we put them out. First thing about buying a home is for you to think about your down payment. It depends on the kind of mortgage that you plan to get. If you plan on getting an FHA mortgage, your down payment is at 3.5% of the sales price. If you're looking at a conventional loan, then you're looking anyway from 5, 10, 15, 20%, depending on your liquidity. If you're looking at a VA loan is for veterans. We salute our veterans. And on a VA loan, you can get it with 0% down. Another way to get help on your down payment is to look for down payment assistance programs in your state. The downside about down payment assistance programs is that the lender determines your interest rate. Our second item is home inspection. Why do we do home inspection? We do this to make sure that the house you're buying is up to the building codes and standard of the area. An inspection is conducted by a licensed inspector. Work with experienced inspectors. Inspections will cost you anyway from $300 to $1,000, depending on the size of the house. What I advise my clients, it doesn't matter if it's a new home or an old home. I always advise them inspection is a necessity. And in cases where some clients don't think it's necessary to do an inspection, I always have them sign a waiver. Inspection fees is one of those items paid out of closing. So at the end, when you get your closing statement, you will see POC, which means paid out of closing. An appraisal is a comprehensive report of the property done by an expert appraiser. An appraiser helps you determine the value of your property. It also helps against price hiking. Why do I say that? For example, so if your sales price is at $300,000 and your appraiser comes in at $310,000, it's good news for you because you are walking into that home with a $10,000 equity. But if the appraisal comes in at $285,000, you have to do two things. You either add more money to your down payment, but most of the times what you need to do is renegotiate the price with the seller, because the lender will only give you what the house is appraised for and not what the sales price is. So an appraisal is also a paid out of closing. It's a POC. So you pay out of your pocket. It runs anyway from 500 to 1,000, depending on the size of the house. Number 4, let's talk about property taxes. When you buy a home, at closing, you are responsible for the taxes from the day you sign those papers at the title company to the end of the year. The seller is responsible from January 1st till today, July 17th. What the title company will do, they will collect your property taxes sometimes for 4 to 6 months upfront. Keep that in your escrow account. Whenever the property taxes become due, your mortgage servicer will make this payment on your behalf. And this is part of your closing cost. When you buy a house, the lender requires you to keep a homeowner insurance, or what we call a hazard insurance, in case something happened to the property. At least the lender is protected. Homeowner insurance in the Houston area costs an average of $1,600, depending now on the size of your house. Your homeowner insurance is also one of the items that is escrowed by the title company. So the title company will also collect about 4 to 6 months of your homeowner's insurance as part of your escrow. And at the end of the year, when the insurance is due, your mortgage servicer pays that insurance on your behalf. Your monthly payments consist of 4 items. P, I, T, I. This is the principal, this is the interest, this is the tax, and that is the insurance. You can always get best deals on homeowner insurance if you combine them with your auto insurance. Your mortgage insurance, each time you're buying a home and you're putting down less than 20% of the sales price, the lender imposes a mortgage insurance. Depending on the kind of loan that you have, if you have an FHA loan, the mortgage insurance stays for the life of the loan. If you have a conventional loan, you can drop your mortgage insurance as soon as you pay up to 20% of the principal of your house. Mortgage insurance can cost you anywhere from $150 to about $300 a month. Your rent is rent you're paying to somebody that is living out of your doors. Your mortgage is equity you're building in your house. You need to know is the homeowner association and co-op fees. When you're buying a property, you are mandated to be a member of the homeowners association. The HOA fees is what you pay for the use of community amenities and the common areas. Some homeowner associations, they have golf clubs, some of them have tennis courts, some of them have swimming pools for the kids, some of them have restaurants, some of them have a clubhouse where you can book for your small events. So it is a mandatory fee that you pay. And in Houston, homeowner association fees in Houston range anyway from $500 to about $1,000, depending on the kind of amenities that you have. You also want to check some homeowner associations, they require you to pay a transfer fee in order to belong to their association. So you make sure you check with your realtor if you have a transfer fee in your HOA, and the transfer fee sometimes could be anyways from 100 to the most I've seen is like 250. Make sure you check with your realtor. And your homeowner association, you pay it one time, either at the beginning of the year or at the end of the year. And it's usually not calculated inside your mortgage. It's outside of your mortgage. And if you're buying, let's say, a condo, the homeowner association fees for condos sometimes is very expensive for common areas. I've seen some condos whose homeowners association are up to about $300 a month. So you want to be careful and make sure you check on that. Credit fees are fees that your loan officer or the mortgage broker will charge you for pulling up your credit, doing an assessment of your income and your expenses, determining your debt to income ratio, what we call DTI, which is very important in determining your interest rate. The higher your debt to income ratio, the higher your interest rate. The lower your debt to income ratio, the lower your interest rate. Credit fees will run you anywhere from, let's say, $50 to $150, depending on your lender or your loan officer. This is what they also do when to determine how much house you qualify for. And once they determine how much house you qualify for, then they issue you a pre-approval letter. The pre-approval letter is simply saying, based on your income and your assets and your liabilities, you qualify, the lender has qualified you for X amount of dollars. When you see a house, go out with a realtor, you see a home you like, if you do not have a pre-approval letter, you cannot even make an offer. The seller will need to see the pre-approval to determine if you're eligible for the house or not. Your closing cost is usually about 2 to 5% of your loan amount. It consists of lender fees, title company fees, it consists of your escrows. Remember, I talked about the title company will collect about 4 to 6 months of your property taxes and your hazard insurance. So keep this in mind as your closing cost when you're getting ready to buy. Sometimes talk to your realtor. Your realtor can be able to negotiate with the seller so the seller can help you with some of your closing costs. So how much money do you need to buy a house? You must be able to manage your expectations. And the 9 points I've given you are the things you're supposed to have in your head as you prepare to buy. Make sure you talk to your realtor so they can better navigate this process for you and negotiate some of these items for you as well. Thank you if you've already subscribed to our channel. C2C Mentors is a real estate mentorship community. And all we do here is talk about your family's finances because we understand it is the foundation for every family's growth. Thank you and see you on the next video.